53.5. So we will actually just move up 0.5.
Okay.
But then we moved up, many places because we were at a cluster point where you have a number of countries. If you think about the best performing countries in Africa, like Rwanda, South Africa, Mauritius, they're at about 85. So if you're at 53, let's say percent, even though it's not percent, if you're at 53.5%, and even within Africa, people are at 85, it means that there's still a long way to go. But in terms of what we've done to make us achieve the progress we made, is been mostly around the use of technology. Because the ease of paying taxes itself is a benchmark of 3 factors. One is your total tax rate, i.e. put everything together that you pay on the profits you make. What percentage of your profit do you pay out to government? Number 2 is the number of payments you have to make. Of course, the more the number of payments, the more difficult the tax system. Number 3 is the time to comply. In other words, do I have to spend all my time just trying to do the right thing? Or can I just spend a few hours and I'll be okay? Again, the lower the number of hours, the better for the tax system. So these combination of factors are the things they use in ranking different countries. So for Nigeria, our total tax rate remained the same between last year and current year. The number of payments remained the same at about 48 between last year and this year. So the only thing that has improved is the time to comply. And how did it improve? Because the FRS in particular have been using technology, trying to introduce new way of paying, filing returns. And usually once you use technology, you cut off a lot of time. For example, I don't need to physically travel to the tax office. If going to the tax office was going to be 4 hours, but I can do it online, I just cut off 4 hours. So that is why our number of hours to comply has reduced, because the FRS has implemented the use of technology in paying taxes and in filing returns. Now, one thing I need to clarify is that is good for these reports.
Okay.
But it's not good enough for the tax system. And what do I mean by that? In filling this survey, and we are involved as one of the people who complete this survey,
and the World Bank. Okay.
and the World Bank. In filling that survey, you assume a medium-sized company. And then you say, is online filing available? And you say yes, and you fill it. But if you think about the uptake in Nigeria, more than 90% of taxpayers are not using it, which means that the experience of Nigerians and taxpayers is a little bit different from this survey, because if you go on the street and they tell you, well, I don't know what you're talking about, I still have to go to the tax office. So I would acknowledge and admit that it is progress we're making, but to make that really impactful, we need to ensure that issues to do with adoption, issues to do with challenges with the system, around infrastructure, around support, and all of that has to be dealt with very quickly, such that you have at least 90% of your taxpayers using the system and having this new experience.
So if, if one were to go to the streets of Lagos and ask the typical business person, perhaps even a small business, they are the engine of the economy anyways, and the answer is no across, if the broad response is no, then I'm just thinking that perhaps that is still not a true reflection in terms, the score may not be a true reflection in terms of how effective we've been able to use technology, because if it's not impacting on those people, the bulk of the businesses, then we're not using it right.
Yes, and you're very correct. Even, for those of us, take the Big Four accounting firm who deal with the largest taxpayers, even the uptake is very, very low. So you can imagine if large taxpayers are struggling to use the system, you would imagine for the MSMEs, they're probably not even using it at all. And here's the thing. One thing that cuts across in Nigeria, especially when you look at the public service and government and how they do things, there's so much focus on efforts. We have created a website. We can now do online filing. We don't focus enough on outcome and impact. What you find in most countries where they've adopted technology for taxes, the tax authorities are required to report, out of X million of taxpayers that I have, this percentage now file online rather than manual.
I mean, I would imagine that would be a given.
It's supposed to be a given, but in Nigeria it is not, unfortunately. Not only should you then report how many of your taxpayers are now using the new system, you also report how much that has reduced the time they needed to spend. So as a result of this, I have 80% of my taxpayers using the system. Instead of spending 5 hours, they now spend 30 minutes to do XYZ, which could be filing VAT and whatever it is. We haven't been focusing on that. And what that means is once government agencies just put in the efforts to create a platform, they move on to the next thing that they want to tick the next box without so much focus on whether really it's working. Technology is good, but if you don't do it well, you just might find yourself getting better at doing the wrong things. Yeah, you need to address all those issues. Can people log in? Is it easy for them to register online? If you register online, can you get your record? Do I have to do online and still do manual? One of the issues that we find that cuts across is many taxpayers, especially the SME, say, well, when I do the online one and I'm dealing with the tax authority, they still ask me for the hard copy. So why do I have to do both? Let me just continue with the manual.
With the old way. Because I'm thinking that, yes, even if it would appear that there is progress, like you said, making that effort and then just moving on to the next thing, it's just like a circle. They're going to get to a point where they come back to a major bottleneck, which they would then trace back to the fact that that technology that they used is not effective and not reducing the burden on both the regulator and the taxpayer itself. So what does this take us?
Yeah.
Because I would imagine that an FIRS will look at this and say, hey, we're doing something fantastic, so let's move into 2019 and continue on this same path. Is that what we can expect?
Yeah, that's what we should expect. I don't know whether that's what is happening and whether it's happening at the scale that it should. If you focus on the outcome and impact, like I said, it helps you to answer so many questions. Because usually you'd expect that human beings are rational. And if I can take two options and one gives me a better outcome, every rational human being will take the better outcome. So if you have online filing and people are not using it, it must be something there that is pushing them back. And it's a combination of factors from training even the FRS officers themselves. So you go to a number of offices and they're asking you for hard copy when they have online system. So have they been trained? What's their KPI in terms of ensuring that they use the system and encourage their taxpayers to do the same thing? How about taxpayer awareness? The processes that you have to go through to register, to go online, to do filing, how easy is that system? How about infrastructure? How about support? Once you identify all these bottlenecks and difficulties and you start addressing them one by one, a lot of them will be within the control of the tax authorities. I do admit a few of them will be outside of their control, but let's start with the things we can control first.
Taiwo Idele, a partner and head of tax regulation at PwC Nigeria. I will bring you the rest of the show after the break. Do stay with us.
Change West Africa, proudly brought to you by InterSwitch, transaction solutions you can depend on.
It's morning in Africa. It won't be bright for another hour or two, but the continent is already on the move. Trade is picking up, and spirits are high as the continent prepares to move yet another 1 million tons of goods to markets across the seas. It's the hour for making tea and coffee, of cotton bales, splitting wood, diamonds in metal boxes, and tall, tall buildings going up. The train engines are revving up, factories are opening, and big undersea cables are pushing the continent alive. 4 time zones, 1 million opportunities, and vibrant young professionals 100 million strong. It's morning in Africa, and one bank is opening the door to endless opportunities. With seamless Pan-African payment and trade solutions and presence in Europe, Asia, and the Middle East, we are Africa's gateway to the world. Access Bank. Speed, service, security.
It's wonderful that the governments have now realized that the private sector is an important part of financing health. they need now to take the next step, which is to say that they can actually do it with African private sector.
It is inspiring to see the progress we have made in nearly 2 years, from conceptualization of the Africa Business Coalition alongside Agbuje Mokude to building its business case.
Goals 7 to 15 is where we need to leverage the private sector and find the financial instruments to invest in people's economies, countries' economies, so that when they grow, those taxes, those revenues that we get, feed the domestic budget to pay for the services of health and education.
Just after the African Union Summit in February, where we will have a huge gathering of leaders of the private sector, leaders of the public sector, and we're going to be discussing specifics to come up with this universal plan for Africa, to really shift the needle as far as healthcare on our continent is concerned.
Open Exchange West Africa, proudly brought to you by InterSwitch, transaction solutions you can depend on.
Welcome back to Open Exchange West Africa. The governor of the Central Bank of Nigeria, Godwin Emefiele, says Nigeria's inflation rate is expected to rise to about 11.4% for the rest of the year until mid-2019 and then moderate thereafter. Bankole Odunsoya, head fixed income trading at UBA, joins us now to discuss the outlook for Nigeria's fixed income and forex markets. Bankole, thanks so much for joining us. Before we get into the fixed income market, I just want you to comment briefly on the currency markets. Clearly, the big headline last week was the weakness we saw in the parallel market, and subsequently we heard that the central bank is committing to make a lot more dollars available to stem the tide of the weakness. What are your expectations this week, considering that we now have an extra opportunity where, on Wednesday, I believe, when the central bank will supply the markets?
Yeah, the central bank has come out to say they would intervene with an additional day of engagement with the parallel market. This is because they've actually expected this to happen. The volatility or the activity levels we're seeing in the FX market is actually expected. Of course, it's yield tide season. Most of the demand is coming to the parallel market from travel allowances, and it's expected, like I said earlier, towards the end of the year, of course, there's elections and all that. There's a lot of pull-out in the capital markets, debt and equities. They have had a plan for this. From the records of treasury bills maturing in October, November, and December, that's last quarter, and the amounts of non-deliverable forwards maturing also, they have good data on how much is expected to be pulled out, and I believe they have a plan for this. So really, they will be coming in with $15,000 per BDC on Thursdays.
Yes. Meaning
that the only days that the central bank will be intervening in the FX market will be Tuesday.
Right.
And then wholesale will be sold on Monday, $210 million.
So overall, you think that we will see maybe some Naira strengthening this week after that?
Yeah, the intervention is planned to bring in confidence and not to, stop people from bringing their demand forward. Most of the people who go into the market sometimes want to buy ahead of time. So if you're sure that they're going to intervene and there's liquid market, you don't need to do that, basically. So they're bringing confidence and comfort back into the market.
Right. Okay, so let's move on to the fixed income market, and how do you see that playing out over the course of this month? I think the big item to focus on over the last month and, of course, this month is these maturities that are coming in the OMO market and how the central bank will deal with that. So potentially we could see, as we saw last month, the central bank being very aggressive in even issuing more OMO bills to mop up the excess liquidity. Do you expect that to happen? And to what extent do you think this will have an impact on yields?
Yeah, what the central bank have, the DMO has announced that they will be redeeming fully December 13 and December 20 treasury bills. This is because they have raised funds externally, basically, and we saw this play out last year also. Upon release of that news, we saw a knee-jerk reaction. We saw certain houses, some banks coming to buy in heavily. But knowing fully well that the central bank, on the other hand, would mop up excess liquidity, there was some caution. The demand tapered after that. And last week we saw the central bank come in 3 times, which is unusual. They used to come in just once. They came in 3 times to raise about 600 billion. They inched up rates on the 1 year to 15% from 14.5, and that takes the effective yield to 17.6 levels. That makes it attractive. I can tell you that there's inquiries coming in even from some FPIs at this level. So that's the plan. Make the treasury bills on the long end attractive so you can retain some FPIs and some other fund managers.
All right. So as you mentioned, that 1 year bill yield obviously increased. Do you think that it could increase even more from this point? If the central bank, for instance, does not see the desired result and foreign investors getting more invested in Nigerian fixed income instruments, do you think potentially they could raise it by another 1 percentage point?
Yes, if we look at what has happened since this second quarter, April, and then to date, we've seen that they've continued to increase the rate in order to accommodate people who demand for higher yields. And we expect that this is going to continue to the first quarter of next year because there's elections, and after that, it will become the shift will then will change to demand coming in from the FPI, because we look after elections and results will be announced, results gone either way, we believe the FPIs will come back because the yields they are incredible right now as we speak.
And earlier I mentioned the comment about the expectations for inflation. To what extent do you think that is on the minds of investors, given the dynamics that are playing out right now? It does appear that inflation has found a range somewhere between, say, 11.3, maybe 11.5. Do you get the sense that as long as it stays within that range, there'll be very little movement of investment flows or demand of higher yields linked to inflation?
The market view on inflation is that inflation will get to about 13% next year. What we're seeing now is just an oscillation. We've seen an uptick from 11.2 to 11.8 and then 11.26. We expect it to continue to grow, and I'm going to give you the reasons why. This view is pushing demand for higher rates, because you need to guide your real rate of return. In a single year, 12 calendar months, inflation could catch up with a bill of 13%. So you need to high demand for 16, 15 levels. We're looking at food prices next year, given the flooding we've suffered this year and insecurity from the food basket. That's number one. Number two, minimum wage discussions that are ongoing. There's a high likelihood that minimum wage could be increased for certain bracket levels in the federal government or government workers. And the third one will be fuel subsidy being managed by NNPC. All those three in one basket will cause prices to go up. And if prices go up, you want to guard against your real rate of return. That is your effective yield versus the inflation rate.
No, I think very, very useful points about the inflation outlook there. Thank you so much for your insight. We'll have to leave it there. Bankole Odunsoya, Head Fixed Income Trading at UBA. Derinade Niro, real estate investment analyst at Home-Based Mortgage Bank, says Nigeria's mortgage banking industry is growing as the number of people taking mortgages is growing daily. CNBC Africa's Christy Cole caught up with him to discuss the trends in Nigeria's mortgage system.
Ecostone Nigeria has come up with a style that has not been seen in this country before. I've been opportune to be part of the project, I think, close to from the beginning. And with what I saw at one of the sites, I think they'll be able to achieve it. Coming with a building that will give you a degree, 7 degree lower, I mean a temperature 7 degrees lower than what you have outside. I think that is fantastic.
What we have here today is a prototype. Tell me to what extent you actually believe in the reality of putting up a structure, mass housing structure actually, within 14 days as they are promising.
Okay, what you have here today is a prototype, but what you have at one of the sites in Badagry is not a prototype. They've actually started the real structure in Badagry. and they were able to achieve it in this number of days. So if you consider that, you will know they can actually get it done. Now, the technology itself allows for them to achieve those numbers within the short days. So I think the major challenge they will have had is getting those equipment. So having gotten it, I don't see any problem in them achieving 14 in 4 days. No, 4 in 14 days. Yeah.
Derry, you are an operator within Nigeria's mortgage system. Speak to me on the current trends within that system.
Okay, it is interesting to know that mortgage banking industry is growing in the country. Before now, people don't really know about it. Now, not that people have known so much about it, but it's growing every day. And as a mortgage banker, I can tell you that the number of people taking mortgage on a daily basis has really increased. The interest rate is interesting now. I think government have done so much. The birth of a secondary market, that's Nigeria Mortgage and Finance Company, has actually also contributed to the success of mortgage banking in Nigeria. Before now, we used to have interest rates above 20. But that has been able to bring down the interest rate below 20. Presently, at Home-Based Mortgage Bank, we do 17% per annum, which I think for the economy of this country is highly commendable. So it's actually improving.
Derry, help me understand. Are you by any means suggesting that a lack of access to mortgage financing in Nigeria is largely due to lack of access to information, or is the system as defective as Nigerians think it is?
It's absolutely lack of information. Yes, the lack of knowledge of how it works make people believe that you need so much to get mortgage. Now, there was something we did at Home-Based Mortgage Bank a few months back. We called on the realtors, on the real estate agents, and other individuals who are willing to be part of it, and we train them on how mortgages work. Now, the essence of calling the realtors and the real estate agents is solely because these people meet with people who want to buy their houses and who feel that, oh, I can't afford this house. But when we let them know how mortgages work, you don't need to know anyone for mortgage to work for you. You don't need to have any other security or collateral. The property you are buying serves as your collateral. All you need is have a source of income. Before now, again, people believe that if I'm not employed, then I cannot get mortgage. But now we let people realize that even when you are self-employed, there is an underwriting standard for that sector too. So you will realize that now we have underwriting standard for the employed guys. We have another one, a different one for the self-employed guys. We have for people in diaspora. So it's really improving. It's about the knowledge, and we are trying our best to disseminate this information that, yes, mortgage actually works. You don't need to know anyone. So some people's fear, like I spoke to someone about 2 weeks ago, and they said if he had the information I've given him on that day, he probably would have owned his home a long time ago. But I thought that once you are not able to meet your payment in one day, then the next day the property doesn't belong to you again.
So by virtue of your alliance with EcoStone Nigeria, what we are seeing here today is a collaboration between a real estate firm, a mortgage financing firm, and maybe the state government.
Yes.
What would you say, when you look back, have been constituting hindrances to collaborations of this nature within Nigeria's real estate and financing system?
Okay, EcoStone will be the first company to partner with Lagos State. Lagos State before now has PPP, which is like a joint venture that EcoStone is doing. The difference between what we've had before now and EcoStone is EcoStone bringing in a unique technology. You understand? Now, also because the focus of this government, of this present regime, has been on reducing the housing deficit, I think that also encouraged more partnership, which is what we are seeing today.
Derry Adediro, real estate investment analyst at Home-Based Mortgage Bank. And that's a wrap on Open Exchange West Africa for today. Join us again for Power Lunch West Africa at 12 p.m. West African time. Tune in for that and connect with us on Twitter at CNBC Africa and me at Wale Famirewa. And don't forget to use the hashtag OEWA410. Stay tuned to CNBC Africa. We're first in business worldwide.
Open Exchange West Africa, proudly brought to you by InterSwitch, transaction solutions you can depend on.
Join us for the third edition of the Africa 2018 Forum. Gain insights from renowned speakers and foremost experts, and connect with business leaders, decision makers, and investors from Africa and the world. Engage with Africa's most promising startups at the Young Entrepreneurs Day. Join the continent's most influential women empowering Africa. Help shape the continent's agenda and join us on the 8th and 9th of December 2018 in Sharm el-Sheikh, Egypt. Africa 2018, business for Africa and the world.
Hi, my name is Ada, and I'm your go-to girl. I'm fluent in English and Pidgin, and I am learning a few basic words in Yoruba, Igbo, and Hausa. Think that's cool? Wait till you hear one of my jokes. You can chat with me on Facebook Messenger with the handle by Diamond Ada. I can help you open a bank account, buy airtime, transfer money, pay bills, buy movie tickets, apply for a loan, check football updates, check stock prices, weather forecast, and lots more. I am your go-to girl when you need to carry out simple everyday banking and non-banking transactions. You should pay for my services. But hey, what are friends for? So, look for me on Facebook Messenger and chat with me. I'll be waiting. You can also visit www.diamondbank.com or any Diamond Bank branch to know more about me. Diamond, your bank.
The winner of the 2018 All-Africa Business Leader of the Year, Peter Mountford, Supergroup CEO. The winner for the 2018 Africa Businesswoman of the Year, Nomkita Ngweni, Absa Wealth Investment Management and Insurance CEO. The winner for the 2018 All-Africa Industrialist of the Year, Quinton Uren, Gendermark Automation Managing Director. The winner for the 2018 All-Africa Entrepreneur of the Year, Thembalihle Baloyi, Discovery Insure, Founder and Executive Director. The winner for the 2018 All-Africa Company of the Year, Ethiopian Airlines. The winner for the 2018 Young Business Leader of the Year, Dr. Elikem Tamaklo, Nyaho Medical Center, Managing Director. The winner for the 2018 All-Africa Innovator of the Year, James Patterson and Benjamin Malta, Aerobotics co-founders. The 2018 All-Africa Philanthropist of the Year, Sir Donald Gordon, founder of the Donald Gordon Foundation. The 2018 All-Africa Lifetime Achievement Award, Sol Kersner. The 2018 African of the Year, His Excellency Paul Kagame, President of the Republic of Rwanda.
Towards the bottom end, so it is those cyclical areas of the market benefiting more, and you can see real estate, utilities all hanging around this part of the boards with food and drink, the defensives. So as we move forward, basic resources 1% north. We're still warming up, as you can see, a number of stocks yet to open up, but it is a strong signal for that sector as well. Industrials 1.5% higher, very firm for industrial stocks. Retail stocks 1.7%, but right at the top, technology a bounce of 2%. And this is around the supply chain into China. If there is a breakthrough between the US and China, some of these global supply chain players may benefit from that narrative. Oil and gas, a very stunning move this morning, 3%, 3.2% almost, as the basket of stocks moves forward on the back of this story that we've heard. That trade might be getting resolved. That's got to be good news for demand. And don't forget, there's no OPEC meeting as well on the agenda. So investors very much watching all the factors. European indices, this is how we look. 7082 on the FTSE. We're travelling forward by 1.5%. Actually, on a day where sterling is being supported as well, the stock market is rallying. So we've got both moving higher in lockstep instead of that opposite trade that we normally see where sterling drops and FTSE moves higher. But bigger numbers elsewhere. The French market has pushed forward by 2.1%, claiming the 5,100 handle very early on in trade. Triple-digit day is playing out here in Europe. The one demonstrating a lot of appetite too is the Italian stock market, 387 points north or more than 2%. The other ones, the IBEX in Spain, 1.6% higher, 1.4 on the slightly more defensive part of the markets, the SMI in Zurich. You can see by contrast, this is how the DAX wrapped up shop on Friday, where we were just fading into the finish for the Friday session. Very different mood music this morning as Monday begins. There's strong indications for France, for Italy, and we'll see whether the German market also plays. It does look like from the early signals that we had on futures that it'll be about a 2% open to for the DAX, but you can see it's not opening up just yet, so we'll come back to it when we see some signals. Let me take you to the mining stocks and we'll get a close look at how some of those big players are trading. BHP this morning, I wonder whether that's even opened up for trade because it looks like we're not getting any volume through some of these numbers. Again, on a market where everybody's jumping in, you're seeing some delayed opens on some of these stock prices. Glencore, Rio, Anglo, Antofagasta, for instance. Randgold, we've got 1.6, and we'll come back to this chart as well. Autos. It's a big week for autos. One of the big stories, of course, has again been around global supply chain. The thornier the state of affairs is between the United States and China, then the more negative that is for a key part of the